Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is March 8, 2023. I'm going to cover the stock market, bond market, charts, precious metals, and show you what has been happening during this past week. I'll begin with the dashboard. This is as of Friday, last Friday, and this shows 7 indexes. 4 equity indexes in the U.S., the Dow, S&P, NASDAQ 100, and the Russell 2000, and then 2 foreign indexes, emerging markets and developed markets, and the 20-year government long-term bond. I drew a white line across where the S&P 500 is. That's SPY, and that's the exchange-traded fund for the S&P. And you can see it's kind of right in the middle of the pack. And I put in a yellow box going vertical the results of this last week, and then the green box, the results of this past year, or since January 1. So and I've ranked these based on the year to date. So going from the best to the worst. The best is the NASDAQ 100 is a gain of 12.54%. And then you drop down to the Russell 2000, gain of 9, developed markets, gain of 7, and then down to the S&P, a gain of 5.69. And then below that, emerging markets, long-term government bond, and the Dow Industrials. So it's very interesting that the ones that are the best were the ones that were the worst last year. So they've just like all changed places. The green dots, the columns of green dots to the right cover the 20, 50, 100, and 200-day moving averages. And if those indexes are above those averages, then it's a green dot. If they're below, it's a red dot. So a red dot would show that it is lagging or it is underperforming relative to the moving average. So green dot more positive, red dot more negative. Also, as of Friday, last Friday, March the 3rd, I take the S&P 500 and break it apart into its 11 sectors. And you can see in the yellow box in the center, the yellow box, all of them except one was positive for this past week. And all of them except 2 are negative. All of them except 2 are positive year to date. Again, just like the last dashboard, the ones that are the worst were the best last year, or they were the least worst last year, I guess you'd say that. And the ones that were the worst last year are the best this year. So we get the more dynamic more dynamic sectors, consumer discretionary, technology, and retail. Those are usually toward the top in a market that is a climbing market. To the right of that, you see the columns of green dots and red dots. Same thing, 20, 50, 100, and 200-day moving averages. This number has gone up over the previous year, over the previous week. There are more green dots than the previous week. There were 3 days, was Monday, Tuesday, Wednesday, were negative, but Thursday and Friday were so positive, so excellent, that they pushed all of these numbers, not all, but nearly all of these numbers into positive territory. Now I'm going to give you just a 12-month chart. It's a weekly chart. 1 move equals 1 week, positive or negative. And you can see the direction of the S&P 500 over the past 15 months. And the direction is still in a downward direction. The macro trend is down, but you can see that little tick up at the end that represents that what we just looked at, the positive effect of the S&P 500 for the past week. So it depends on what view you take. If you take a short-term view, it's starting to look positive. If you take a intermediate-term view, it is still in a downward trend. We are still definitely in bear market conditions. When we compare the growth component of the S&P 500 to the value component, you can see that the growth, meaning numerator, and value, denominator, that if it goes up, that favors growth stocks, and if it goes down, it favors value stocks. It is still in a downward direction, meaning it is still favoring value stocks. There are periods where growth stocks will surge, but then that tends to collapse. And so not only is the market in a long-term or intermediate-term downward trajectory, but the growth stocks are in a downward trajectory. Now, based on the last several days, the growth stock seems to be surging up, so that could change. But over this long period of time, it is favoring value stocks, and generally the market conditions are in a negative direction. When I compare also, this is a relative strength, so I compare the Russell 2000 small cap index, the exchange traded fund, IWM, is the Russell 2000, and compare that, that's the numerator, compare that to the denominator, SPY, which is the large cap, the largest 500 companies in the stock exchange. Compare those two, then you can see that there is a slight direction toward small cap. Small cap tends to be moving slightly in an upward direction, but a lot of up and down, but you know, generally you can see the direction of it. And that is a 24-month period of time. Then I take the long-term government bond, the 20-year government bond, over a 32-month period of time, so I can show you both components, both periods of time where the long-term government bond went down, the first black arrow on the left, and then the second black arrow, one on the right, you can see the long-term, that period of time, trajectory moving down. That is about a 15-month period of time where the long-term government bond is under pressure. What this means is that the target date funds in 401k plans, 60-40 portfolios, buy and hold portfolios are still under a lot of pressure. The US dollar, represented by the ETF UUP, this is a 20-month chart, has gone up a lot, and then it has gone down. You can see both arrows, the one on the left showing the long-term trajectory up, and then several months ago, you can see the trajectory down. The dollar is weakening, which means that it is more attractive for people to be buying U.S. goods and services when the dollar is down. Gold, this is the ETF GLD. This is a 12-month weekly chart. It has been, for the last several weeks, has generally been in a correction, kind of a downward direction. You can see at the right, but the black arrow shows that it's still in a period of time, is still moving upward. And this past week, you can see the tick up at the end. This past week, gold and silver had positive weeks. This is silver, same thing. It looks a little different, but you can see that it had a correction, but then a move up by that tick at the end. But I would say right now, I put the black arrow on because I still see it as still under pressure and moving somewhat in a downward direction at this point. When I compare the do a relative strength and compare silver to gold, silver numerator, gold denominator, you can see the degree to which gold, while it has gone down, it has gone down less than silver. So relatively speaking, gold is the least worst of the two for that period of time. But then this past week, it somewhat flattened out. I would say it's still in a downward period, meaning that favors gold. Bitcoin has a long-term trajectory that is down, I should say intermediate-term trajectory, and it continued to be down this past week, and this is represented by the exchange-traded fund GBTC, and so not time quite yet to be excited about the movement of Bitcoin. Volatility index. Now this is pretty telling. This tells you the degree of negative volatility in the market. I put the black line, arbitrary, at 24, and you can see the direction. It's a downward direction of the volatility index, meaning volatility is down, meaning it is a favorable, tending to be more of a favorable environment for equities than when it would be going up. When it goes up, that's less favorable. But now it's separating, it's getting a distance between itself and that mark at 24. Asbury Research, while the market started moving up toward the end of the week, it moved a couple of the indicators into green territory, and four of them are still negative. So that's as of last Friday. Asbury does a cross-asset relative performance chart showing the relative strength of certain types of assets to others. So I focus on the ones that are in green. You can see, and the three columns to the right are the last week, the last month, and the last quarter. So stocks are stronger in all three categories than bonds. High beta, higher volatility type stocks, growth stocks typically, are more favorable than low beta, low volatility. The broad market, meaning the S&P 500, is more favorable, definitely more favorable than the Dow, which is the blue chip stocks. And technology is more favorable than the broad market, the S&P 500. And growth, which is mostly comprised of technology, is more favorable than value stocks. Again, I'm going to focus on the green boxes. So this is from Asbury Research still. You can see that the U.S. is indicated in a number of places, but there is no definite trend that is favoring one direction or the other. So it's not strong enough to get a green box. This has been going on for months and months, where the U.S. is not stronger than these various developing markets and developed markets. The ones that are strongest in all three categories are Chile, Italy, Japan, Mexico, and the Eurozone. That's it. They're all stronger than the U.S. I thought I would put the Eurozone, Europe, represented by the exchange-traded fund EZU, in a relative strength chart to SPY, representing the S&P 500, the U.S. equity market. You can see for the past almost exactly 6-month period of time that the Eurozone has been outperforming the S&P 500 quite a bit. The gold and silver, this is the spot price, which does not include the markup, retail markup. The spot price of gold and silver, gold is at $18.58 as you saw on previous chart, up 2.4% from the previous week. Silver, 21.29, up 2.5%. And on top of that, you do need to add the markup. I'm glad the stock market closes on the weekend. It gives my fingernails a chance to grow back. I don't know if that's you or not, but this has been kind of a roller coaster period. It looks like maybe we're entering into at least some kind of period, a short-term or intermediate term period where equities are starting to improve. Certainly hope so. And that, the period of 2022 and even the second half of February 2023 is behind us, at least for the short run. Thank you for watching. If you have questions or comments, leave them in the comment section below, and I will try to answer them. Thank you for watching.